All right, Bruce at you with Amzy and Amazon. So, what happened on Monday? Well, Amazon was, why is this show? Gee, where is my, yeah, there we go. Sorry, guys. Um, it was down. I better double check that because we were up 3 cents. I know it was down, but I can't recall if 14 is the right cents is the right down number. Let me just check it. Yep, 14 cents from 166.94 to 166.80. So it was down minus 0.08 and we were up 0.16. So we were up 3 cents. So good job. Amzy. All right. So no trades, no shares bought. Well, not no trades, no shares bought. They did a pretty large trade. This was one they basically had to do. So if you recall, Amazon with the big drop had a 200 synthetic for quite a while. So that was way underwater. And they even had so what they've been doing is just, it was an 816 expiration. So they just kept rolling out of it. And every time they rolled out of it, it cost them a bunch of money. And then they rolled into a 165, which is positive. But in that process, they lose a bunch of money when they buy that put back from 200. And then they lose some money when they write a 165 because they got to buy the call, okay, which is below pricing, and sell the put, which is up at 166.80, 166.94. That cost them money. So I'm just going to give you a heads up that it's an ugly month. They have lost right now $4 this month from all that. Now they're ready to start making money. Are they going to make up the $4 loss? Absolutely not. So I think you're going to think last month was a poor payout. They'll probably pay out less than that. I'm just giving it to you straight. But I do think they're positioned and did the right thing to set themselves up to win in the future. So let's dive into that. So again, here's the nature of those positions, right? So on 812, the intraday trades closed out. So you don't buy a call and sell a put, you sell the put and buy the call. What can you get for it? With 4 more days of expiration, and it's $35 under the call price, nothing. Basically, they're granted a penny. And then they buy to close this for 32.85. And then they take and they always want to have an equal number of weekly calls and synthetics. So they wrote that same quantity. And you see on a 165 that they have to buy a call. This is actually adding and instead of getting rid of it. So now they have no more 200s. And that was the goal because they only had 4 more days. So they bought a 10 and a half for $10.50 to 165, and they sold a 165 put for 663, both in the same quantity. So what does that look like? Well, when you look at it, it's pretty ugly. So this was the one they did on Friday when they got down to 10,300 contracts. They bought it for a penny. Sorry, they sold it for a penny, bought for 33.29. So they sold for a penny, bought for 32.85. Now they're done. So each one of those, they had a 4 million profit. Minus is positive, and a 4 million profit. They now have a 30 million loss. So for August, that's our 200. We're done with it, right? They could write another one if we get up over 200 again, but not looking like that near term. So that guy's all closed out, and the 165. So on Friday, same thing. They sold that 200 bought this. A little bit closer, 1091 and 7.5. So this shows a loss. So we just added more 12 and then we added another 3. So we're just piling on the losses. But the reality is we have a gain. This is the paper gain. This was a realized loss. So if we go up to 170, then we're going to have a $10 gain and the put's going to be worthless. Of course, this one's out till 920. Or sorry, this one's out to 1018. They did the right thing when they went out. They went way out. So Amazon, with steady performances, can get back in the game and start making money. But this month isn't going to be a good month. No, they always find a way to pay something. And I'll get there. Just bear with me. So let's go to the weeklies. We're still winning our weeklies. Amazon was down 14 cents. We were up 3 cents. Whoopee, right? But hey, it's better than being down. We're staying below our calls. We don't want to run past 170, and we sure don't want to run past 172.50. So for right now, they dictate. If I said, do I want it to run to 80? Heck no, 180. Because we're going to get killed here, even though the synthetic makes up, but you just tread water. You want to have them right further out. Don't make very much money, but allow a synthetic to go. It all just depends on the market, right? So that's what we've got. So now we can look at holding. So again, just like I showed you guys, anybody that watched GDXY, sorry guys, I just was not in a good mood. This, I'm getting back to normal here. I had a long, busy weekend, and so look at this. This is the sign of an up move. Now, in some fairness, this didn't do what GDX did to move up. They rolled out of a losing synthetic, and I'm only tracking the majority. So these were tracking the big losing 200. And now all I have left to track, and actually this isn't even updated because I got these numbers backwards here. Hang on. 10, 6. Yeah, something. Okay, let me fix this. -6, 9, 5, 1, 4, 4, 5. There we go. All right. And so, in some sense, these 4 days don't represent apples to apples. This was the loss on the big guy, on the 200, and then we started moving. But that's what you want. You want that to happen. And so the fund managers did the right thing. I don't have an issue with the fund managers here. And we can still win these, but I don't want to see us go over 170. So we only got about $1 and 20 cents that we can go up because there's more at 6,070. So just go along and win your weeklies. Like I said, if I own Amzy, just accept the fact you're going to get 30 cents, maybe 40 cents, and that's it. And it's a horrible month. And then you can move forward and have a good month. Okay, if they do a little bit better, that's okay. But you're not going to get 80 cents. You're not going to get $1. The math just does not work. We got killed, and it's going to take a while to recover from that with that 30-point drop in value. And that's the NASDAQ. If you ask me, it's just priced to perfection. This is not the first stock, and it won't be the last. Okay, guys, so we're winning, and we continue to drop this down. We now have 43%, right? This guy is a little bit higher up there, so we've got a higher percentage. But this one has more contracts, and it's closer, right? We're 168.80. I think that's the number. 166.80, not quite as bad. So we got $3.20, a little more reasonable. Okay. And we were 333 away on the 172 when we were 183. So these are accurate numbers, right, of how far away we are. 1.92% and 3.42. All right, let's continue on the holdings. We closed at 1878, and they're saying that the NAV, net asset value, right, all their assets and liabilities add together divided by the number of outstanding shares, and that's what you get. Now, it would help if people were buying Amazon so that the money they got, they could write, if they got a bunch of money on Monday, they could have written a 175 or 174. Usually they do the $2.50, 172 and a half, and then 175. But even writing another 172 and a half seems reasonable to me if they got new cash. Um, so that's the situation. And let's take a look at payouts. This is what's ugly, guys. I'm not upset about this. I'm just calm down. Sure, we got 17 cents in short call because we wrote our weekly calls, right? But look at this number. This number went way up. It went up bad on Friday when they took some of the 200. It went further, and then they lost money when they wrote the 165. But we do have a paper gain of 4 million. But 4 million doesn't wipe out. 4 million is 50 cents. We've got a $4.07 loss, and it's all right here. And call this 9. 4 times 9 is 36. So over $4 is coming out of this. Okay, guys. And so that can't be made up, not in a short period of time. Because if the stock went up $25 and the call was $3, you'd lose so much money on those calls. It just can't happen. It has to be a slow, gradual rise. Okay. So that's why when we dropped to 76 and I was shocked. I thought they might just find a way to pay it. They didn't. And you know what? You'd be lucky to get 47 cents again. Probably 30 cents. Again, I wasn't privy to how much cash they had. They didn't seem to have much reserve to make this a higher payment when they collected $1.14. Well, they're going to lose 404. They could pay you 47 cents, and they may, but don't expect anything more than that this month. Okay, that's what I got for Amazon. Still a great, steady stock. Again, does a consumer, if we don't get an emergency rate cut, if we don't get a rate cut, okay, although they're saying in September, not, and that's fine, but you got to wait till September if you don't get an emergency rate cut. And that's the only thing that's going to stimulate the market. And I know there's those pundits that say, no, that spreads fear and says something must be wrong. Well, guys, I got news for you. There's a lot of things wrong. And it all starts with the letter D, debt. We just have way too much debt. We and every other First Nation country, Japan, Germany, England, France. I could go on, in Australia. I could go on and on and on about that. The Euros, probably banks are in worse position than the US banks are. And the US banks are not exactly in great shape. All right, guys, I don't want to get going on negative stuff. Some of these stocks, Amazon's a great company. They're almost monopolistic in the retail environment, but that means they make money. But even they are saying in their guidance that customers are switching from more expensive to less expensive product. They're still shopping. And what is that? That's the purse strings are getting tightened, right? We all know how much inflation is out there in property taxes, automobile insurance, home insurance. Those are real and they're big. And, wages aren't going up to match that. People are feeling the pinch in this stagflation environment. Okay, guys, that's what I got for you again. Not financial advice. I'm not a financial advisor. I think Amazon did the right thing. I don't have any Yieldmax fault on what's going on. All right, guys. Um, Not financial advice, not financial advisor. Bye for now.